Hi, Brent Simit here from InformedTrades.com. Today's Thursday, September 18th, 2014. Time for our daily Forex news and charts update. In these sessions, I review a few headlines I think are important for Forex traders and traders in general to bear in mind, macroeconomic news, driving long-term fundamentals, as well as the trades that I'm personally placing in my account, the updates to those positions. All my trades are documented on InformedTrades.com, where you can see my entire trade history. The trades are verified by myfxbook.com, a trade verification service. Any questions you have on any information I'm presenting here, we have a huge learning section on Informed Trades. Check it out. Register as a member. Share your knowledge. Ask questions. We can all learn together. Let's get started with a look at the news. Major announcement for today is definitely the news from the Fed yesterday that Janet Yellen, or excuse me, the Fed will be raising rates, or it's unclear as to when they'll be raising rates. So here's the headline from the Wall Street Journal. Fed plots cautious course on rate rises. So it's still very unclear as to when the Fed will raise rates. But here, this article from Bloomberg offers a little more insight. Even so, it says, even so, policymakers projected a steeper increase in borrowing costs next year, raising the median forecast for the benchmark rate at the end of 2015 to 1.375%, and for the first quarter of 2017, or excuse me, for the end of 2017, for rates to be at 3.75%. So that is if we really do see rates at 3.75% in 2017, that is sort of something that traders have been really keeping an eye out for as to if that occurs. It should have some significant repercussions in the U.S. economy. Namely, higher interest rates, what's it going to do to the bond market? How's that going to impact stocks? How's it going to impact real estate? My impression, my hunch, is that a raise in the bond market cannot handle it. And I think that's where the bond market is really going to see some pressure. I don't think the U.S. government budget can handle it. I don't think the bond market can handle it. And I would expect stocks to increase, to rally, and there'd be a capital exodus from the bond market. That's sort of been my expectation for quite some time now. I would think we've had more progress along that trajectory, although maybe it's going to take a rise in interest rates for it to really get going. We'll see. In any event, I think it's definitely something to watch out for. And of course, how the economy reacts, is particularly in Japan, how other economies work. That's going to also be something especially important to watch. Speaking of Japan, I view Japan as being, the U.S. being on a similar trajectory to Japan, but Japan is just further along. So I think Japan could be in many ways seen as a leading indicator. 41 consecutive months of a trade deficit for Japan. You can see that article here. And the Japanese yen has plunged to a 6-year low. This article from Zero Hedge. Nikkei top 16,000. Japanese deficit 41 months in a row, and the yen is at a 6-year low. So I think the U.S. economy might see similar things. You know, a year from now, 2 years from now, we might see S&P at a new high and the dollar at a new low. But we'll see. That's sort of just my expectation. We'll see if the technicals confirm that. Speaking of technicals and trading, let's take a look at some of the trades that I have on at the moment. Just 1 second here. Okay. Okay. Now you should be seeing on the screen now, Euro Australian dollar. This is a trade I have. Just 1 second. I have 4 trades that are just got filled, or got filled between yesterday and today. Let's run down the list. Euro Australian dollar is one that just got filled. You can see I entered here. Basically a downtrend. Price is slightly above the 50 simple moving average, but overall you see the moving average sloping downwards. You can see a downward sloping trajectory in price. Also a pattern of lower highs, which is key. We've had more than a 50% pullback from this swing high in August 8th down to this swing low in September 4th. The market is retraced almost 100% there. Back to a resistance level. I entered at this resistance level of 43.73. My stop is at 44.33. My stop at 38.08. So this is a really nice reward risk setup of over 9 to 1. In terms of the logic, I wanted to put the stop loss above the recent high here, because I think if we make a new high, that invalidates the trend, the trade. And the target profit is back down here, this recent low. So that's just naturally set up a really nice reward risk of over 9.5 to 1. That is Euro Aussie. This position for me is slightly out of the money at the moment, almost at break even though, so a little too early to judge it in my opinion. Next up, Aussie Kiwi. I entered here, price, very similar dynamic here. Price had recently formed a swing high on September 5th. September 5th was a major turning day in the markets. We've seen a lot of highs formed then and retracements pulled back there. And these 4 trades that I have on are basically retracements from that September 5th high. You see price is in a bit of an uptrend. We have a little bit of a pattern of higher lows here, but what I really regarded as confirmation of the uptrend is the 50 crossing the 200 exponential moving average. The 50 is now above that, and price is above both of them. So price is above both moving averages. We pulled back to a major support level after reaching a swing high here. So it's a very similar setup of pulling back to a support level in the midst of a trend and looking to enter there. This position is also, well, it's in the money now. But just barely, basically at break even, so very slightly in the money. Next up, Pound Canada. Okay, and this follows by now the playbook that I use for trading is pretty clear. Look for a clear trend. This is a clear downtrend. Price is below the 50 simple moving average, again below the 200 exponential moving average. I guess what would make this trend a little bit stronger is if the 50 was below the 200. Right now the 200 is below the 50. So if the moving averages were quote-unquote properly aligned, where the 50 is closer to price than the 200, that would make it a much clearer trend. However, we do see, I view this long trend here from really from January all the way up until August as a distribution pattern. So price had rallied from January to August. It was range bound. That's distribution. And now I think the downtrend has occurred. We've broken south. Now we have a bit of a pullback to a resistance level that was established here in February, and so I entered there. And of course the stop is above the resistance level, but between the next resistance level, which would have been right here. So about 3 to 1 reward risk on this trade, targeting the recent swing low here. So Pound Canada, this position is in the money. So far, so good on that. The position that's most developed, most far along, the only one at which I've moved my stop to break even, so I still have risk exposure on the other 3 trades, is this Kiwi Yen trade. And we talked about the problems the yen is facing. We talked about that a whole bunch. InformedTrades.com/Japan. Kyle Bass at $Yen. He had a target of 116 by year end. To me, that seems really ambitious. He said that in February of this year. But the way the yen's moving of late, who knows? Maybe we'll get there. Big breakout to the upside. I entered here at 86.30. My stop is there. I've been in this trade for quite some time, going back to August. So over a month, I've been holding on to this trade, and I still have a while to go because the target is 89.65. So we'll see if we get there. But so far, the trade has been de-risked. It's just a matter of now just sitting back and waiting. Nice bullish candle yesterday that suggests that a new surge of bullish strength has entered the market, and hopefully that gives enough energy for the market to reach 89.65, the high reached on July 9th. And that is sort of about it for my trading for today. Any questions you have, as well as for the news, any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.